Hey everyone, it's Friday morning, February 7th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Let's get started. Before we dive in, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, the stock market was all over the place yesterday as investors waited for Amazon's earnings and kept an eye on Washington's latest policy moves. The Standard & Poor's 500 rose by 0.3%. The Nasdaq climbed 0.5% for its third straight day of gains, but the Dow Jones slipped by 0.3%. Earlier in the week, tariff fears rocked the markets, but investors are now shifting their focus to earnings, especially in tech and AI. After Google and Microsoft both disappointed with weaker-than-expected cloud revenue, all eyes were on Amazon's results. Amazon reported after the bell, and well, it was a mixed bag. The company beat expectations on revenue and profit, bringing in $187.7 billion in sales for the quarter. But its guidance for the first quarter fell short, projecting between $151 billion and $155 billion, while analysts were expecting $158 billion. That sent Amazon stock lower in after-hours trading. Investors are also watching how much big tech is spending on artificial intelligence. Amazon's CEO confirmed the company planned to invest at least $75 billion in AI infrastructure last year, and even more in 2025. In other corporate news, Salesforce shares dropped after a management shakeup, and Honeywell announced plans to split into 3 separate companies. Meanwhile, in Washington, Treasury Secretary Scott Bessent tried to take some pressure off the Federal Reserve, saying Trump wants to push down 10-year Treasury yields to ease borrowing costs instead of forcing immediate rate cuts. That helped bring the 10-year yield down to around 4.43%, its lowest level since December. On the economic front, jobless claims came in at 219,000 last week, slightly above expectations. Investors will be watching today's jobs report for clues about what the Fed might do next. That's your quick market recap. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Sella, and I'll see you back here tomorrow. Cheerio.